For a long time, Bitcoin was, well, it was just a thing you held. It didn't do anything. But what if you could take its biggest feature, that wild volatility, and turn it into a paycheck? Like actual monthly income? Well, that's exactly the promise behind the NEOS Bitcoin High Income ETF, or BTCI. Today, we're going to pop the hood on this thing and see how its money engine really works.
I mean, this has been the big question for investors for, what, a decade now? Stocks give you dividends, bonds pay you interest, but Bitcoin? It never gave you a yield. The only way you made money was by selling it for more than you bought it for. Simple as that. Well, until now.
But yeah, the game is totally changing. There's this new type of fund, and BTCI is really leading the charge here, that's come up with a pretty clever solution. They've basically built this engine that doesn't really care which way the price of Bitcoin is headed. It just takes the raw energy from all those price swings and turns it into cold, hard cash.
And right here, this is the core trade-off, A normal spot Bitcoin ETF, think of BlackRock's IBIT. That's all about pure price exposure. If Bitcoin goes to the moon, you're right there with it, uncapped. But BTCI, it's playing a totally different game. The goal isn't just price appreciation anymore. It's about generating monthly income. So you get this really high payout, but, and this is the big but, you give up that unlimited upside. It really makes you ask yourself a question. Am I trying to just accumulate more Bitcoin, or am I looking for income right now?
All right, so how does this thing actually work? How does this engine run? Let's get under the hood and really dig into the mechanics of how it takes all that market chaos and turns it into, well, a predictable stream of cash.
Okay, so at the very core of this engine is a strategy called a synthetic covered call. Now, I know that sounds super complicated, but the idea behind it is actually pretty simple. Instead of going out and buying a ton of Bitcoin, the fund uses options contracts to just mimic owning it. And why do they do that? Because this method is incredibly capital efficient. It frees up a huge pile of cash, and that cash is absolutely critical for the next part of the process.
So the whole thing really breaks down into 3 simple steps. First, the fund gets its Bitcoin exposure using that synthetic strategy we just talked about. Step 2, and this is really the magic right here, it sells call options against that exposure. You can think of it like you're renting out the potential upside of your Bitcoin for a fee, and that fee, they call it a premium, is just cash that goes right into the fund's pocket. Then step 3, it just takes all those premiums it collected and pays them out to you, the shareholder, as a monthly distribution.
And this is what I was talking about with all that freed up cash. Just look at this. This shows you the fund's really conservative backbone. Because that synthetic strategy is so efficient, more than 92% of the fund's assets are just sitting in super safe U.S. Treasury bills. So you see, it's not really a pure crypto fund. It's more like a T-bill portfolio that has this really slick Bitcoin income strategy layered right on top, and that provides a massive amount of stability. Okay, but in a market this competitive, you need more than just a good idea. You need a defensible advantage, right? You need a moat. And BTCI has built its moat on 3 main pillars: its sheer scale, a really smart tax structure, and of course, some seriously deep management expertise. Let's break down each one of those.
First up is scale. We're talking nearly $1 billion in assets here. That makes BTCI an absolute giant in its little corner of the market. And that size, it creates a powerful liquidity moat. What does that mean for you? It means tighter trading spreads when you buy and sell. And it attracts the big fish, the serious institutional money that just can't bother with smaller funds.
All right, the second pillar, and honestly, this one is a huge deal: tax efficiency. Get this, a whopping 96% of their recent payouts were classified as return of capital. Now, what that means is that instead of getting a tax bill, it just reduces your cost basis. So you don't actually pay taxes on that income until the day you sell your shares. If you're investing in a regular taxable account, this is just a massive, massive advantage. And this tax moat, it's got a few different layers to it. You've got that return of capital shield we just mentioned. On top of that, the fund uses what are called Section 1256 contracts, and those get a much better blended tax rate. And then there's this clever little bit of legal engineering. It uses a Cayman subsidiary to hold the spot ETFs, which is how it keeps its tax-friendly status in the US. So the big takeaway here isn't just that BTCI offers a high yield, it's about offering a high tax-efficient yield, and that's a key difference.
And that brings us to the third pillar, the management team. Look, the guys behind BTCI aren't just some crypto tourists who showed up late to the party. These are the pioneers of the entire options-based ETF industry. You could argue that their deep expertise is the fund's most valuable asset, even if you can't see it on a balance sheet.
I mean, just look at their track record. Their journey goes all the way back to 2013, when they launched the very first options-based ETF in the United States.
They've been honing this craft for years at different firms before they finally founded NEOS to focus specifically on these kinds of next evolution strategies. So this timeline, it's not just a resume. It's proof. It's over a decade of innovation in this very specific, very niche part of the market.
But look, no moat is perfect, right? Nothing is impenetrable. So to really give you the full picture, we have to put this thing through a stress test. We need to look at the real vulnerabilities, the real competitive threats, the stuff that could actually crack the foundation of this whole strategy. So let's take a look at the competitive landscape. Right now, BTCI is the big dog in terms of size, no question. But you've got these smaller funds out there, like YBTC and YBIT, chasing the same investors with even higher yields. But the real elephant in the room, the one everyone is watching, it's that name looming down at the bottom of the chart, BlackRock. And they're coming. And that leads us to what is, without a doubt, the single biggest threat to BTCI, a price war. A giant like BlackRock can leverage its insane scale and its distribution network to launch a competing product for a fraction of the cost. They can essentially commoditize this entire strategy. And as you know, in the world of ETFs, cost is king. This isn't just a threat, it's a direct assault on BTCI's entire business model.
This chart really puts the risks in perspective. That mega manager competition we just talked about, that's a severity level 5. It's the biggest, most immediate threat on the board. Right behind that, at a level 4, is the risk that Bitcoin's volatility starts to dry up. And then you have the wild card, regulatory changes, sitting at a level 3.
So let's talk a little more about that volatility risk. Remember, the whole income engine runs on one thing and one thing only: Bitcoin's crazy price swings. That's its fuel. But what happens as Bitcoin grows up, as it becomes more of a mature, institutional asset? Well, those swings could get smaller and smaller. And less volatility means lower option premiums. And lower premiums means the income engine itself starts to sputter. That would threaten the entire reason this fund exists.
And here's the other key vulnerability, and it's kind of ironic, because it would happen if Bitcoin does exactly what everyone wants it to do. Imagine a massive up-only bull run. If that happens, BTTI is going to get left in the dust. Why? Because its options strategy puts a cap on the gains. So while everyone holding spot Bitcoin is popping champagne, BTTI investors might be looking at their returns, getting frustrated, and selling out of the fund. That is the fundamental trade-off you make for getting that income.
Okay, so let's boil this all down to the key takeaways. What do you really need to know? 1. BTTI offers a really smart solution to Bitcoin's long-standing no-yield problem. 2. It's built a pretty strong moat based on its size, its tax advantages, and its expert management team. But, and this is a big but, 3. That moat is very vulnerable. It's threatened by low-cost giants and the risk that its fuel, market volatility, could dry up over time. And that brings us to the final point, the trade-off. As an investor, you're giving up that shot at unlimited gains in exchange for a consistent monthly paycheck. Which really leaves us with one last really big question to think about. Is this whole strategy, harvesting volatility, is it a durable, long-term way to make money? Or is it just a brilliant but temporary advantage? Is it just an opportunity that exists right now, one that's going to fade away as the Wild West of the crypto market finally grows up? The answer to that question, well, it's probably going to define the future of income investing in this whole new world of digital assets.